What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 17. It's November the 2nd, 2023. We made some trades today, so let's get into it. So first and foremost, let's discuss the important levels that we have on the chart today. So yesterday's closing price was 33,336. But as you can see, when we opened the market at 9:30, we opened at around 536. So we were already 200 points above yesterday's closing price. And that actually leads me into what I want to talk about before we get into the trades. I just want to talk about the landscape of the day and talk about exactly what we went through. So a trend day. I got this from Linda Rashke. She's one of the traders that was in the, I think, the original Market Wizards books back from the 80s, and she's been trading for like 30 years, very well known, very successful. So a trend day occurs when there is an expansion in the daily trading range and the open and close are near opposite extremes. So let's go ahead and let's look at today's chart with everything stripped from it, and let's just look at it bare bones, pure price action. So let's see. Wow. Okay, that's definitely a trend day. So let's go ahead. Well, let's start from 9:30 really quick. So okay, this is 9:30 right here when the market opened, all the way until 4 o'clock right here. So notice how we opened on the lows at 556, somewhere around there. And then we ended up closing around 936. So the Dow rose about 400 points. And throughout the whole day, the trend was pretty much, for the most part, the trend was up. So I just wanted to go back and compare this day to a few other trend days in the past, because when you run into a trend day like this, the easiest thing for you to do is to just follow whichever direction the market is going. So if it's an uptrending day like this one on October 30th, you just go long and you don't even look for the short trades. And that's pretty much the theme when it comes to pretty much all trending days. You do not want to fight that trend. And I've been on that side a whole lot of times where I have fought the trend, because I'm just like, look, the market has already moved up 300 points. It's up by like a percentage and a half. And then it just made a double top followed by a lower high. So I should short it right here, right? No. On any other day, yes, that will probably make a lot of sense. But on a trend day, you got to ignore all setups that will go against the overall market trend, because this is what the market is going to do all day. This was from August 29th. This was from August 24th. This is a downtrending day, but a trending day nonetheless. And this one was from April 27th this year. So a trend day is a day that begins at its lows and closes at or near its highs. On this day, the Dow rose 550 points. So if you compare this chart to what we're looking at today, notice how they're very similar. So this is from the 27th, and this is from today. Almost an exact carbon copy. So when it comes to trend days, the one thing that you always want to remember is that you only go one direction, the direction of the trend. And no matter how strong the selling might look, always remember that the buyers are probably going to come in sooner or later to push prices higher. So you can use that to your advantage, because we're going to talk about the trades that I made today. Today I came out profitable and did pretty well, but it's been a lot of days in the past that actually helped me learn from my mistakes, because I can't tell you how many times I've shorted against a market like this, expecting for the uptrend to stop because it's ran too far, right? But that's not always the case. So let's go ahead and get into it. So trade number one, I went long right here as prices retested the prior higher low, but my break even got hit. And sometimes on the trending day, the setups that you get into, if you get in from the right levels, a lot of times you might get hit for break even, because prices are going to come back, retest that level like maybe 2 or 3 times, and then come back up. Now you could choose to maybe not move your stop up to break even once your trade goes a certain way in your favor, but for me, I just learned the hard way that it's better to just take a break even trade rather than to move my break even back down and risk the possibility of loss. Because if I take a break even, I'm like, okay, I could have had gains, but I could have had losses also. So I'm happy to come away with, you know, just a 0-0 net, because I believe that I can take the next best trade that comes my way. So for that reason, I just decided to keep my break even stop where it was all day long. And that really came back to actually help me a whole lot. And we'll get into that a little bit later. After trade one, we moved up to 2 and 3. So at 2 and 3, I went long here as prices retested the prior higher low. But I was unsure right here, so I just got out. And I think I talked about that yesterday, where you might be in a trade, but if the reasons that you got in don't really make that much sense anymore, just go ahead and get out. Now right here, the reason that I got out was because I initially went long expecting for the higher low to hold up. But once I saw the fact that we were bouncing off of this zone and we were having a little bit of trouble breaking through it after we already had this big move to the downside right here, I was like, yeah, you know what? Let me just go ahead and get out until I see a better signal. So I pretty much just waited through all of this uptrend and just let the trend really confirm itself. Because I had an idea that maybe we could have a trend day, seeing as how yesterday was the FOMC announcement. Usually the day that follows the FOMC Fed meeting is a very, very, very volatile day because, you know, when the announcement comes out, it comes out at 2 o'clock. So you really don't have that much time to really digest what happened. And then the dude for the FOMC chair, he comes out at 2:30 with his press conference. So pretty much you really have an hour and a half to digest what's really going on. But for a lot of traders, that's just not enough. So you let all of the traders and investors study what happened during the market that day and study all night. And then they come back the next day with a plan. They're like, okay, the Fed decided to keep interest rates where they are at an all-time high. So this is what I want to do. So you have a lot of traders and investors on all time frames coming in, making positions, making trades, and just being active in the market, which leads to a lot of volatility. So, you know, it doesn't always guarantee that a trend day will happen, but it makes it more likely. So I was like, okay, I believe that it could be a trend day, but let me wait for confirmation. So once I saw the fact that we had this strong sell-off, came all the way back, broke past that high with strong volume and strong momentum on this candle and created a new high for the day, and then we continued to keep on running, I was like, okay, I'm starting to see that it's turning out to be a trending day. So let me go ahead and start looking for some good long entries. And that's what led me to trade number 4. So right here, I went long based on the higher low support level. As prices came back to retest the higher low, I went long. So I was looking for the big move right here, and I passed on the small move, and my break even got hit. So on trade 4, I could have definitely got my 20-point scalp target. But because I felt like it was a trend day, I was like, look, let me just hold my trade, because on trend days, usually you can get a lot more than what your regular profit targets will be. And honestly, the best strategy on a trend day is to just buy it at a low price and just hold it until you see a selling signal that's just so clear that you got to get out. But for the most part, if you buy on a trend day and just hold it, you can hold it all the way to the end of the day and lock in major profits. That's what I'm working on right now. I eventually hope to get to that level in terms of my trading one day, but I'm way too scared to just buy it one time and then hold it for the rest of the day. I can't do it. But maybe one day I will. I'm working on that. But on trade 4, I let that scalp trade get away from me. I could have got my regular 20 to 25 point profit target, but I let it slip out of my hands. Then I came back on trade 5, went long here as prices retested the prior higher low. And the same thing happened that happened on trade 4. I left too much on the table. I had an opportunity to get out right here and take some decent amount of profits, but I just didn't do it. And then on trade 6, pretty much the same scenario as 4 and 5. I went long here at the same level based on the support level of the higher low starting to hold up. And then I just took it back up to a major level above. I was trying to hold it up to around 750 because I was like, okay, that's the next major quarter level that we should be trying to reach, since the uptrend is definitely moving. But once we kind of had this large long tail candle wick right here, I said, you know what? I hit my profit target. I'm in profit. I didn't lock in my profit from these last 2 trades. Let me just get something right here. So I locked in my regular scalp target right there and did fairly well right there. Not mad. So at trade 7, I saw that prices were in a small zone, which is very common when it comes to a trend day. When you're in a trend day, usually you have a whole lot of flags back to back to back. So you have a spike and then you have a consolidation. Next, you have another spike and then a consolidation. And that's usually how it goes all day long. So within those consolidation periods, you can just look to trade the zone. So that's all I did right here on trade 7. I saw that prices were in a small zone, so I bought it at the bottom and I sold it at the top for a very quick scalp and just locked in some profit right there and kind of made up for the profits that I missed on 4 and 5. So that was part 1 right there. That was the morning session from 9:30 to 11:30. So now let's talk about the second part of today's day, the afternoon session, like the mid-afternoon from 11 o'clock until 1:30. So let's start. Wait, where did we leave off at? We left off on trade 7. That's trade 7 right here. Okay, cool. So notice how even though it was a trending day where the trend was up all day, there were sometimes a very heavy selling, which was very interesting because it should be a trend day, right? But on trend days, sometimes you will get those heavy bouts of selling. But what's really interesting is the fact that all of that selling immediately got bought up. So this is what I'm talking about right here. Look at how prices came to the top of the zone at 750 and then had a huge sell-off all the way back down to around 670. But on that sell-off, on that same exact candle where the sell-off ended, notice how buyers came in and pretty much ran the market all the way back up to almost the same point where the initial downtrend started from. So if the sellers were really that strong in the market, it should have been no way that they had the move that they just made be undid by the buyers within the next 2 to 3 minutes. So that tells you just how much strength is in the market from the buying side. The buyers are there and they're looking to go long. So that's pretty much the reinforcement that I needed to just tell me that, okay, this is a trending day. So on a trending day, remember, like I said earlier, even though you might have opportunities on the short side, I would just prefer, me personally, to just not even look for the short trades, because I know that eventually the market has a very high probability of moving back up to the upside and creating a new high for that particular session. So I just sat through all of these lower highs as prices continued to move down. And then once we finally formed a double bottom right here, this is double bottom 1, double bottom 2, we formed this double bottom on major support, and then we had a higher low that got formed. So that's pretty much what led me to trade 8. So I went long here after prices formed a double bottom and a higher low after bouncing away from major support. And then I just took that long trade and took it back up to the next level of resistance above. So after trade 8, I just saw the uptrend continue, but I wasn't quite sure whether or not we were really going to break past this zone up here at 750, which was a high for the day. So I said, you know what, I'm really not looking to go long until we break above that level and I see that the buyers definitely want the trend to continue and they want to go higher. So that led me to trade number 9. So at 9, I went long right here as prices came back to retest the prior higher low, but I got out once I saw the lower high at point A. And that's very important when it comes to a trending day. Even though I said you should only look to get in the market from one direction, it doesn't mean that you ignore all of the selling signals if you're in a position, because you still got to respect price action and you still got to respect the market. So right here, I saw the lower high at A, and you combine that with the fact that we had 1, 2, 3, 4 wicks that formed the highest price for the day at that time. That shows weakness. So anytime you have multiple wicks at a major level of resistance, that's just telling you that for whatever reason, the buyers do not have enough momentum to push prices past that level, at least not yet. So they got to reset before they can actually get past that level. And then when you combine that with the fact that we had a lower high at A, I was like, man, look, let me just get out. And then thirdly, the third and final factor that really led to me getting out right here was the fact that anytime you have a breakout, more than likely it's like a 85 to 90% chance that you come back and retest the levels from that breakout. So once you see resistance up here starting to hold, you see a lower high at A, and you see the fact that the market never came back to retest this breakout area, you say, it looks like they want to come back and test that level. So let me just get out and look for a better opportunity. If this trade works, okay, I just missed it. But if it doesn't, I missed out on taking a huge loss. And that's exactly what happened today, because as you see, if I didn't get out right here, I would have had to take a very fat loss as prices came all the way back down about 40 points lower and came all the way back to support. So that's why you always want to make sure you pay attention to the signs in the market, because the price action is going to tell you where prices are trying to go. So after that, we see another lower high get formed, but like I said earlier, I just didn't want to go long until I was 100% sure that we had broken out of the zone and that it was no signs of us coming back, and that would indicate to me that the trend day was definitely still in motion. So that led us to part number 3. So let's just look at this part, this last part from part number 2, where we had this large move to the upside that established a new high for the day. We finally broke above 750. So that brings us into part 3, and we pick up right here where we left off. So this was pretty much the ending part of that flag, the pole part, and this was the consolidation that followed. So once we had the consolidation, I just did the same thing that I did from part 1, where we had the consolidation on trade number 7. Same strategy right here on trade number 10. I went long here at the bottom of the zone after a large breakout flag to the upside. And I was looking for continuation right here, but prices eventually came back to test the bottom of the zone one more time. So I was like, interesting. I could get back in, but I saw that prices were kind of breaking down below the zone. So I said, we do have a lower high right here next to a double top. So let me not just blindly go long. Let me wait for a better opportunity. Now, when you're in a trending day and you have a consolidation zone that gets formed, you always want to look for a false breakout to the downside that gets reversed. So see right here, a lot of sellers probably got trapped and went short thinking that, oh, it's a double top followed by a lower high that got retested, and now prices broke below the support level for the consolidation zone. Time to go short, right? On any other day, yes, that would be the time to go short. But on a trending day, no, you got to expect for the breakouts to the opposite side of the market to fail. So when I saw that the false breakout to the downside was a failure, I said, okay, if they get back above the same entry price that I took trade 10 on, I will go long. So that's what I did right there on trade 11. And that's actually one of my rules too that I think I talked about the other day, which is when you have a good trade that aligns with the market at the right levels from the right prices, and you still get stopped out either for a loss or for break even, if prices ever spike back through your entry price immediately, you got to get back in and you got to ride that momentum back up to whichever direction the prices are moving. In today's scenario, that was to the upside. So you always want to make sure that you get in if momentum is on your side. And that's pretty much what I did and follow on trade number 11 and was able to get a nice profit out of that. So then we come back, we create another higher low right here, but I just wasn't quite sure about this higher low because we did have a lower high that got formed right here at the blue circle. So I'm like, all right, I see what's going on. Let me go ahead and respect the fact that the market formed a lower high. I could be brazen and I could just go against it and say, nah, I'm going long no matter what, but you got to respect price action. So I skipped all of these entries right here until I finally saw the move that I was looking for up here at 12. Now, if you look at what happened on trade 12, let's read the notes first. I went long here at the highs expecting a breakout, and that's not my best trade. I think this was the one time today where I just lost discipline because I saw how much momentum and potential that the market had. So I was like, you know what? I'm just going to go long. I don't care. But you got to remember that you always have to respect price action. And for me as a trader, I'm just not a breakout trader. I trade from the higher low at lower prices at the support level, not from the top level. So I want to make sure that I do not go long at higher prices. And that's the biggest lesson I learned from trade 12. So we come back on 13 and, I'm looking back on it now after I learned my lesson. But during the session, I definitely was a little bit stubborn because I took the exact same trade at 13. But I realized my mistake when I was in it. And I was like, okay, Ty, you bought it the high again. If it didn't work before and it led to a loss, what do you think is going to happen right here? More than likely. So I said, okay, let me just get out real quick. And I'm glad I made that decision because this was kind of like the trade from earlier on trade number 9 where I got out right before that huge wave of selling came in. The same thing happened on trade number 13. I got out right before that selling came in. And that's why you always want to read the price action, because on a trending day, you still have the possibility of prices going lower because you just have everybody piling in on the long side. So it's not the fact that it's a big seller coming in. It's the fact that everybody is long. So all it takes is for a couple of stops to get hit, and then all the stops start to get hit as people try and get out of the market, and everybody is pretty much climbing on top of each other just trying to get out. And it's a large, sharp sell move to the downside. So you always want to make sure you read the price action on trending days so you can avoid big moves to the downside like this one. So that was trade 13. Learned my lesson right there, definitely. And on trade 14, I finally got the higher low that I was looking for. So once I got that higher low, I said, okay, I am in business. So I went ahead and I went long right here, expecting for prices to make a new high for the day and continue trending higher, but that's not what happened. We ended up finding resistance up here at this large high volume candle that got established right before 2 p.m. that led to the high for the day at 865 up until that time. So I expected for us to make a new high, but we weren't able to do it, and I got stopped out for break even, but that's okay with me. So then I said, okay, I know that the trend is still up, so let me just wait for a good sign to go long. So let me wait for a higher low. And that's exactly what I saw right here on 15. So once I saw the higher low, I said, okay, if prices are able to spike back above the same entry prices that I took on 13 and 14 where that prior higher low was, then I'll go long again. Now, this is where it really started to get frustrating for me because as you can see, this zone pretty much lasted for the rest of the day until we broke out in the last 30 minutes. But during that time, I was expecting to break out, so I was going long at support as many times as I could. And I got hit for break even on trades 15, 16. No, on 16, I took a little bit more than break even, like a couple points, but 15, 16, 17, and 18, all of them got hit for break even, which was very frustrating because every time that the market moved, I was like, okay, here we go. It's time for us to make a new high for the day. But that's just not what happened right here. It took a long time and it took a lot of patience. And what I learned from this entire junction between 15 and 18 was that you got to pay attention to what's in front of you. So if we read the notes, it says, I should trade what I see and not what I want it to be. I wanted a new high to be made, but the market is going to do whatever it wants to, and it's my job to react to that. So if I see the fact that prices are coming to support and find the demand right there, but they're not being able to break above and they're having trouble at resistance, then that means that I should take profit when it gets to resistance. Now at 15, me taking a break even on that was okay because I didn't know that we were going to stay in this zone for the next couple of hours. But then on 16, it's like, okay, maybe you can give yourself a pass for that. But one time on 15 was enough to let you know that, hey, maybe on 16, I should take profits. So 16, I give myself a halfway pass. But on 17 and 18, that's just unacceptable for me to not take those gains right there because right here, I'm just blatantly ignoring what the market is offering me. And I'm saying, nah, market, I don't want 15 points. I want 50. So if you're not going to give me 50, I'm not going to take your 15. But if you think about it, I could have caught 15 on trade 15, 16, 17, and 18, which would have been 60 points all in all if I just traded what I saw and not what I wanted it to be. So even though I didn't take losses on these trades, they hit me at break even, it was still very frustrating because in my mind, I look at it as a loss because I had potential gains and then I just let them get away. So I got to work on that. You know, even if it is a trending day, you still don't want to get married to the fact that it is a trend day. You still got to respect price action, like I've been saying all video long. That's very important. So all of those trades got hit for break even. But we come back on 19, my last trade of the day, in the last couple of minutes of the session. I went long here based on the same trade I did from 14 through 18, and I finally caught the move that I was looking for right here. Thank you, market. But it was very frustrating though. I can't lie. You know, I was ready to actually call it quits after trade 18 because I was like, look, how many times is the market going to come back to break even before it just doesn't break out at all? And it's another sharp move to the downside like we've been seeing a couple of times earlier in today's session. But I said, look, Ty, that's your emotion speaking. From a logical perspective, it makes sense that the market should be in a consolidation period because we're coming into the end of the day. A lot of people don't really trade in the afternoon until you get to that last hour. So if the market is going to break out, it'll probably break out in the 3 o'clock hour. So I said, look, I'm going to take one more long trade at trade 19. And that actually ended up being the trade that broke out, came all the way up to a new high. And that's where I took profit and I decided to call it a day. So even though it was frustrating, I still was able to get my best trade of the day on my last trade of the day. So that's some good momentum to go forward into tonight's practice session. I think I did fairly well today. Let's see, I made 513. So I was trading 2 contracts all day. So $10 points. That'll come out to 51 points after commission. So not too bad. One of my best days so far trading this account. But I would say the biggest lessons that I have to learn, the most important one definitely is trade what you see and not what you think. You can always have thoughts and ideas about what you want the market to be, but you can't trade that way unless the market confirms that. So when you go back to part 2 and part 1, I was on it. I saw that it was a trending day. So I said, okay, I know exactly what to do. But as the momentum kind of started to fade out a little bit, I should have changed my methods and should have been like, okay, we're in more so of a consolidation type of market now. So let me get in when I can and take profits at resistance. Now, if I did that all day, I probably would have had maybe 75 to 80 more points than I had right now. And that's really what I want to focus on, because yes, I did have a good day, but I didn't maximize all of the potential that I could have actually grabbed. And it's not like these were trades that I didn't take where I was like, oh, I could have took that one or I could have took that one. No, these were trades and moves that I was actually in, but I didn't capitalize on the profit when I had the opportunity. So that's the biggest thing I got to work on. I feel like if I can work on that and improve that in my back testing session tonight, I should be good and ready to go tomorrow. Because if you think these past 2 days you saw volatility, tomorrow is going to be off the charts more than likely, because not only do we have all of the aftermath from the Fed meeting from yesterday and the post day today, but we also have non-farm payrolls coming out at 8:30 tomorrow. So that'll pretty much give all of the volatility and spark that we need to see tomorrow in order to catch some really good opportunities. So I want to make sure I get all of my mistakes right, get those corrected, and I should be able to come back tomorrow and be able to finish the week strong. And that's my biggest goal, because last week I had a good 4 days from Monday through Thursday, but then on Friday I kind of got a little bit too cocky, a little bit too confident, and started to stray away from my trading plan, and that cost me and I took losses. So tomorrow I want to make sure that I follow my trading plan specifically the way that is laid out. Everything that's in it, it will be followed. Anything that's outside of it will not be taken. And if I do those things, I feel like I should come in and be very successful. So I appreciate you guys for tuning in with me today. I hope you learned a lot about trending days, how to operate in a trending day, and making sure that you always respect the price action. I'll be back tomorrow on November 3rd, ready to run it back again with you guys. But before we go, what I talked about earlier, remember Trend Days by Linda Rashke. So if you want to get some more info on that topic, just go ahead and Google her. You'll find a lot of information. She has a lot of YouTube videos, a lot of books, just a lot of trading material that can help you if you're looking for that. So anyway, I'll be back tomorrow. But until then, you guys have a good one, study hard, and take it easy.